Come with me to a magical place where being labeled the pork queen is a compliment, where being nice is just a way of life, and where all leaders of the free world must pass through. Welcome to Iowa. Whether you're a current Iowan, an Iowa expat, or an Iowan at heart, this show is for you. This is the Iowa Podcast. Real Iowans, real talk, no drama. You know, it may not be the most interesting thing in the world. I mean, taxes and numbers not only bother me, but maybe scare me just a little bit. Numbers scare me. Basic math scares the crap out of me. So that's why when Reynolds announces that she's changing, Governor Reynolds, of course, changing the flat tax rate. And now President Trump has proposed changing some taxes too. It's interesting, but also terrifying for someone like me that doesn't know anything about numbers. That's why we've invited Alec Epkes of Protego Advisors to come in the studio to break down what all this means, how to make sense of it all. I certainly can't help you with that. That's why I've asked Alec to be in here. So thank you so much for coming on the show. Really appreciate it.
Oh, of course. A pleasure. A pleasure.
We're not talking politics today. You all know how the show operates. We're just going to talk about rules, how taxes work, and stuff like that. And if we do our job really well, this won't be boring. So numbers really do terrify me. I think I'm not alone. So let's start out with the Reynolds flat tax rate. We throw terms around like this a lot, like flat tax. What is this thing? What actually happened? Because it came a year earlier. It was supposed to happen like next year, 2026, and it's here a year early. So can you break that down for us? That's probably a good place to start.
Good starting point, yeah. Well, it began back in 2018 when the legislature wanted to introduce reforms to the personal income tax. Back in 2018, in most states, the state income tax is between 4 and 12%. And in 2018, Iowa's highest tax bracket, at the time we had 4 tax brackets. The highest tax bracket was just under 9%. So with most states being between 4 and 12%, we were on the higher end of that. And there was an initiative to reform it, to reduce the amount of taxes so that they're putting more money in residents' pockets. And so there was a progressive rollout over the years. But yeah, starting January 1st, 2025, it was reduced to 3.8%, which is significant relative to where we were at just a few years ago. I think the governor said that change across a 2-year period is going to result in about $1 billion back in the pockets of Iowa residents.
Wow, that's crazy.
Which is,
it's a lot.
A little over $41 million a month.
Yeah.
I mean, it's significant. It's a big change. So, yeah.
What does a flat tax mean? Is that an actual term, or is it just a term that's thrown around?
Yeah, well, it contrasts tax brackets. So as you earn income, you are situated within a particular tax bracket. And then for every incremental dollar that you earn, it could push you into another tax bracket, which is subject to a different rate. And so in Iowa in 2025, it's going to be a 3.8% across the board for all residents.
Everyone.
Yeah.
So there's no tiers anymore, at least in Iowa.
Right.
It's just all the same percentage.
Right. Yep.
So
right.
Does this affect then how write-offs work? Because a lot of people don't understand. I think a lot of people don't understand basic tax law, which is understandable because someone was telling me earlier, tax law now is thicker than the Bible.
Oh.
But does this change how, everyone's going to pay the same percentage? So that obviously means for those, that can do basic math, not me, but, for the normal people that can do basic math, if you have a flat tax rate, everybody basically, you have someone who's barely making anything, they make $1 a year. Mm-hmm. They're obviously going to pay almost 4 pennies of taxes, right? Mm-hmm. And then you have someone who's making $1 gajillion. They're going to pay a centimillion or billion of dollars of taxes, something like that. So that, in my mind, that covers all the bases. Everyone's paying in, but, people who aren't making much pay lower. People who are making a crazy amount pay a lot.
Mm-hmm.
Does the flat tax come with certain write-off restrictions at all, or are those all still the same?
Well, yeah, I mean, for the most part, those are the same. You've got deductions and credits that happen on a tax return form. And so, I mean, to your point, if somebody earned $1 worth of income, those deductions and credits would kick in, resulting in no tax owed.
Oh, got it. Okay.
Yeah. So, but yeah, I mean, the 3.8% makes the amount of tax paid relative to the individual in a way that is different from the brackets, because obviously as you earn more income with the bracket approach, you're taxed more heavily based on the income that you earn.
Right. Is this just a tax savings kind of a thing, or is there some, and this you're not a legal expert at all.
Mm-hmm.
So, if you don't know, that's totally fine.
Yeah.
But is this just a tax savings thing, or is there some administrative savings on this as well, both from the state government side, but also people like yourself? Like, is this make it easier for me to work with this EPA now because things are flat, or does that not change much of anything?
Yeah. I would say, the Tax Foundation is a great research resource for comparing and analyzing state taxes across states in the United States. And the Tax Foundation said that, before 2020, the Iowa Revenue Agency, the way that they earn income is through the income tax, property taxes, the corporate tax, sales taxes, use taxes, and there's other ones, but those are the main revenue drivers. We were ranked 44th out of the 50 states in the United States prior to 2020. And a big incentive, we live in a global economy, but at the state level, the biggest competition that state revenue agencies have is other states, and there is evidence that shows if states have a more favorable tax system or tax structure, it results in more businesses coming to that state and stimulating economic and employment growth.
So this very well could be a tool to also obviously save people in tax money. Yay, I'm all for that. It could also be a tool to attract businesses and individuals here.
Yeah, and to stimulate economic growth. Yeah. So it's a very broadly, it's a two-pronged approach. It puts money back in Iowa residents' pockets, but also it's for the people that maybe aren't yet here. Businesses.
Interesting.
And residents that would find it attractive to move to a state with a lower rate. So, I mentioned before 2020, we were 44th.
Yeah.
With these, as of 2024, we were ranked 20th with these continued reform packages that the legislature is rolling out. And in 2025, the data hasn't come out yet, but we would probably be between the 10th and 14th ranked in terms of cumulative tax per resident in a state, which is big progress across the 5-year period from 44th to between 10 and 14th.
Does this change how people like myself, people listening to the show, file taxes? Like, should they be doing something different? Or is it pretty much like, nah, you're good at the end of the year, you're just going to owe less? Does this should I be changing my habits or anything like that?
Yeah, I would say if you have a strong tax advisor, someone that you can connect with to have a conversation about these law changes, it might make sense to run some tax scenarios to see if you're going to have a significant refund. And if so, you may need to change some of your approaches, and how you are basically accruing for your taxes through your employment withholdings, things like that. So I think that would be a helpful thing. But when it comes to tax season, doing your taxes, it won't look or feel really any different. It's just the ending price tag that you'd be looking at.
Sure. I know there is this one thing, and I don't even fully understand this either, which is, like I said, I pay someone to do that. Maybe I should be a little bit more tuned into this. My wife's really good at it too.
Yeah.
So we both do look at it. She's just way better at it than I am. But there is this idea that at the end of the year, your tax accountant and your advisor says you should spend some more money because like it lowers your tax tier or something, or like if you don't spend this money, you're actually going to pay too much in taxes. Is this going to end? Is this practice going to end if we do a flat tax? Where your advisor's like, it doesn't even matter because there's a flat tax. So, we don't have to do this crazy spending spree at the end of the year to hit your whatever tax. Like, will this change?
Yeah, well, what you're referring to, buy some equipment, do something before the end of the year to reduce your taxes. That's a lot of times a conversation that's had between a tax advisor and a business owner. Individuals maybe don't have the same levers to pull leading into the end of the year because they're not going to be deductions on a personal tax return. But those conversations will continue. I would say those are a bit narrow in scope in terms of the...
Okay. So this is my business owner side coming out.
Yeah. But I would say...
Your mileage may vary.
Well, what I was meaning in narrow in scope is that there's so many more conversations that could be happening with a tax advisor. But yes, that's still going to be a conversation because it reduces your taxable income, which is what's going to drive your tax liability.
Got it. And so obviously there's state and there's federal, and then the president, again, we don't need to, we're not asking your opinion on politics, but the president has suggested ending federal income tax. So is this, if the state of Iowa is lowering their income tax to a flat tax rate, and let's just say the president and Congress actually ends up passing something.
Yeah.
How is this going to dynamically change how taxes are collected in this country? Is this a huge, crazy...
Oh, it would be very significant.
Are CPAs like you pulling their hair out thinking, oh my gosh, this is going to be crazy? Or are you secretly oh my gosh, this will be more straightforward? What's the reaction on your side of the table?
Well, I would say at this point, the most prudent thing to do would just be to continuously monitor what is happening. I mean, the Trump administration is in its infancy,
Yeah.
And it's a very fluid situation. Obviously, the executive orders that have come out are pretty significant in how it's, beginning to address EV tax credits. It's immediately halting hiring within the IRS. And there's some other things that are in play as well that impact taxes. But, we'll see how things come to fruition. The idea of eliminating the income taxes, I would say, immediately attractive to folks. But the on-ramp to be able to accomplish that and figure out scenarios to bring in other tax revenues, it's a very complicated... I mean, like you said,
right.
I mean, the federal tax code is the most complicated in history and throughout the world. If you look at the IRS code and the Treasury regulations and all the things, it's the equivalent of 20 times the Bible. You mentioned it was bigger than the Bible. It's 20 times the volume of the Bible. And so I think everyone has a vested interest in making it more digestible, more easy to understand. Everyone is united on that.
What? But hold on, though. Really, though? Because if the tax code was 2 pages, right, and anybody could understand it in the blink of an eye, wouldn't your industry kind of cease to exist?
Yeah, well, it will never be 2 pages. It will never be 2 pages. But if we're dealing with a volume that's 20 times the size of the Bible, for example,
right,
everyone would be okay if it was 10x or 8x of the volume of the Bible.
So the answer is yes.
It's always going to be, the tax code is designed, yes, to collect revenue
right.
within government agencies. But the other component of tax law that sometimes maybe folks can miss is that it's also designed to encourage certain types of economic activity. And that's the reason that it ends up being such a high amount of volume, is because you've got all these offshoots, kind of off-roads, that discuss how they want to encourage certain economic activity. And so that's what can make it very complicated quickly.
Yeah,
you know?
I mean, it is. Like, it does take, you have a ton of training just to like help people with this stuff. And I will say there are even times when my accountant, with all their training and us figuring things out, we do it the first time, and then we're like, hold up, wait a minute, there's actually this thing. And I'm like, oh, that just saved me $1,000. Like, what if we wouldn't have figured that out? You know, because it's so freaking crazy complicated. There also talk of the extension of the TCJA. I wanted to talk about this too while you're in here, extending the Tax Cuts and Jobs Act, which was set to expire 2025, and capping the top tax rate at 37%, doubling of the standard deduction, and a child tax credit increase from $1,000 to $2,000 will continue if it's extended, that is.
Right.
What is near doubling of the standard deduction? Like, does this change how people itemize federally? And also, what does it mean to itemize? What does that mean?
Yeah. Well, so the standard deduction, when you prepare your tax return, you're either taking a standard deduction or you're taking an itemized deduction. So the standard deduction, the standard deduction is kind of the threshold. So if your itemized deductions eclipse that standard deduction threshold, you're going to be itemizing. You're not going to be claiming the standard deduction. And you're right, the standard deduction doubled under TCJA, and that is presumed to continue based on laws that are going to get passed. My understanding, at least the conversation, is that the child tax credit would also continue. If anything, you mentioned itemized deductions. The TCJA also introduced a change to the itemized deduction. So your state and local income taxes is an input to your itemized deductions. And ultimately, itemized deductions, you sum up all these deduction categories, and if it eclipses your standard deduction, then you're itemizing.
Oh. So it's an either or.
It's either or.
Oh.
Yep. And so the state and local income tax was capped at $10,000 historically. My understanding is that they're going to be addressing that to remove that ceiling so that it's not constraining people that are itemizing and have a lot of state taxes that they pay.
Great. So for anybody who just thought that whole thing went over their head, because I was like struggling too, because it's a lot. Yeah. I know everyone asks like, cool, I'll listen to that 20 times and try to figure it out. What's the bottom line for Iowans listening to that then? Like, if this stuff gets extended, do they change anything? Or is this another thing where it's like, no, it's just an extension, so we kind of maintain the trajectory?
Yeah, I mean, I would say an important outcome of all these conversations, again, to reemphasize, to walk closely with your tax advisor, whomever that might be, because there's been changes at the Iowa level, and there's going to be changes at the federal level. Them extending the TCJA is going to be positive for everyone, meaning that the amount of taxes you're going to pay are going to continue to be lower than if it did sunset, if TCJA did expire. So in that way, it's a good thing. It's more cash in your pocket that you're not paying to government agencies. Yeah.
I was today years old when I also learned that Social Security, people pay taxes on it. Which I was like, and again, here we go again, Justin's misunderstanding of how tax code works. But so it doesn't come out when they pay into it and people pay into Social Security, apparently?
I'm sorry.
Taxes don't come out when you pay into Social Security? Where I thought they did, but they don't apparently. So
the biggest funding source for Social Security is employment taxes. So if this is what you're meaning, so if you're an employee that works for a company and you're on payroll, each payroll run 7.65% of your pay, and then the employer contributes 7.65%. So together, 15.3%.
Right.
They remit to the federal government for Social Security.
Yes.
And obviously, there's a Medicare portion as well. But
yeah.
that's
And the self-employed
destabilizing
people,
Social Security. That's also a topic strand that's been surfacing in 2025 as a result of
thing that Trump has suggested is ending taxes paid on Social Security.
Mm-hmm.
And so this is what I should ask this should be a better question I ask. Social Security then, right now, taxes are withheld or deducted because it's considered income, which I thought was crazy. I'm like, it's like retirement income though. People aren't like actually making the money right now. It's money they already put away. So I had no idea that was actually taxed. It kind of feels like it's taxed twice, if I'm not mistaken. Maybe I'm mistaken. But this would end. So what's that taxed at? Like, how would that change retired Iowans' pockets?
Oh, I mean, again, it's an area that is very much uncertain, just based on where things are at in the conversation,
right?
And it'll be interesting to see as the year progresses. They will publish reports and documentation that discusses the change and how it will impact, everyone, including Iowa residents,
right?
But it would be significant.
Well, what do they currently pay when someone withdraws their Social Security check?
Mm-hmm.
What rate is that taxed at currently?
So when you get payments from Social Security, it's based on the highest 20 years. I believe it's 20, if not it's 30. The highest 20 years of earning as a employee within your vocation.
Whoa!
So if from age 20 to 40, those were your highest earning years, that 7.65% that came off of your wages, then ultimately feeds into the calculation of what you're going to be distributed from Social Security. Does that make sense?
Yeah, that's crazy.
Yeah.
So the tax rate in which you're making right now at that age, if you're like just really rolling it in, when you withdraw Social Security, if it's there, you will be paying that rate again, still.
Well, yeah.
Minus deductions and different laws and that kind of stuff.
Sure.
So that's also, I think, lumped into this is like no taxes on tips and overtime as well. And again, people, to be very clear, these are suggestions. This is not law yet.
Right.
This would have to go through Congress. This would have to get approved. But the no tax on tips and overtime would also factor into that as well. So I'm assuming like past a certain, people would have to track their tips then, right? They'd actually have to track that so they can show the IRS this was salary money, this was tip money. Because right now they don't. I mean, right now that's just all kind of lumped together. I think the industry kind of has to voluntarily report that.
Right.
And so that would basically turn into now you do have to report it, but you won't be taxed on it, kind of a thing.
Well, you do have to report it now.
Well, yeah,
and
yes,
it's loose, meaning that you use the language of voluntary. It is a reporting requirement, but within the hospitality industry, it would be interesting to see what that reporting actually looks like.
Right.
But it is again, I think, when you hear about these types of things, you've got to ask yourself, what are they trying to encourage? What are they trying to incentivize? And it very much focuses on employment within certain industry segments. Hospitality is a great example where it will hopefully boost employment retention in those industries by eliminating tax on overtime hours and tips,
Interesting. So overtime and no tax on tips, both of which it could be argued would definitely be focused in hospitality, retail, those type of environments, which we happen to have a shortage in employees in right now. So this very much could be, and again, neither one of us have direct access to the president. You're certainly welcome to come on, Mr. President. But this could be activity to incentivize growth in those industries.
Yeah, absolutely.
Yeah, this is interesting, actually. And again, it speaks to how stupid I am on this stuff. But you're like, taxes is one part collecting income so the federal government can work, state government can work as well.
Mm-hmm.
But it's very much used as a way to economically incentivize various activities, which, I knew that. But now that you position it that way, it really kind of opens my eyes to when I'm looking at the president suggest certain tax changes. You look back, you as a CPA look past that and you're like, what are they trying to incentivize here?
Yeah.
Like, there's another layer you see.
Yeah. And I would say, for individuals that have a little bit more of a simple tax return scenario, they don't pay much regard to taxes, except for having to deal with the maintenance of it during
I just
tax
cry
time.
when I write the check at the end of the year.
Yeah.
And get really angry. There's like a week I have that I just get super, super mad because I'm self-employed. And so I write a check at the end of the year. And so I see that come out of my paycheck and I'm just like, it feels like it's just your money someone's taking from you.
Yeah.
And I'll be fine. I'll be fine, everybody. But there's that 1 week where I'm just really angry, really mad, and then I get over it.
Yeah, makes total sense. So, but I mean, when somebody has a more simple return scenario, they don't have much regard for tax law. But as your tax situation becomes more complicated and nuanced, you add real estate, you add an entity, you add different things. The tax code is really designed to be a tool in your hand. If the government is encouraging and incentivizing certain types of activities, it's meant to be a tool in your hand to know, wow, I should do A, B, and C. I can easily pull these levers to reduce the amount of taxes that I pay. There's easily over 1,500 different tax deductions, credits, and strategies that are available to everyone, including Iowa residents. So it would drive down taxes, in a helpful way.
So this is a good note to end on because I didn't understand. There's a lot in tax filing, tax code, how to categorize, how to organize that I just didn't understand that I should have understood earlier. And so your bill at the end of the year working with your CPA depends on how much time they spend. And so if you organize things up front and you're more clear on things, then your bill with your CPA is not as high, which maybe to everybody else is like, duh, but I didn't really connect the dots. So what are things people should be doing? It's January and people are going to be tabulating and, putting in their January numbers and they can start tracking things right now. What are some things people should start doing right now so that at the end of the year, when it comes tax time, they save more money on taxes and they also save more money when they hire a tax professional? Like, what are the boxes that they can check starting this month?
Well, to a point that you mentioned earlier, having a healthy respect for what you don't know or what you don't necessarily care to deeply know is a strength. And then bringing people alongside of you that do. And that's what hopefully a CPA, a tax advisor, represents, somebody that knows the tax code that can distill it and apply it to your situation. I would say, 2025 tax planning starts now, for individuals and for businesses. And a lot of times the flair of a relationship with a CPA is, I bring in all my paperwork and documentation to them during tax season, dump it on their desk. They
see ya.
Call me later and let me know how much it is.
Yeah.
And that paradigm of the relationship needs to flip, where you get more in the driver's seat of tax planning, it being less about tax preparation and more about tax planning. And that's where having, again, a great relationship with a CPA is going to be really helpful. Because again, there are so many different opportunities, but you need to have that relationship where they're creating that time to explore those conversations, have them, and then implement some of those strategies.
So is the amount I save overall in the year, both in taxes I pay and in how much I pay someone like you, am I going to overall save more money by bringing in my CPA at the beginning of the year? This is not like a sales I literally want to know this.
No, there's an ROI relationship there.
Sure.
I would say a lot of times people see the relationship with the CPA as a cost center. You know, I just flip them a couple $100 to do my taxes, and then he cranks it out. But if there's an ROI relationship there where an advisor says, hey, we can easily save you $25,000 by pulling these levers, it's going to make a lot of sense intuitively to go with someone that maybe commands a bit of a higher fee. But again, the ROI relationship is definitely there.
So there are levers that you can encourage customers to pull right now throughout the year that you can't pull later because that time has passed.
Oh, 100%.
Interesting. That's fascinating.
Yeah.
Like, again, you're welcome, everybody, by the way, for those listening. You're welcome that I'm so stupid on this stuff because we get to the real answers here. Alec, Epkes, Protego Advisors.
You bet.
Thank you so much for coming on the show. If people want to reach out and learn more about what you do, what's the website?
It's just protegoadvisors.com.
That's easy.
Yeah.
Alec, thanks so much for coming on the Iowa podcast.
Yeah, you bet.
And to my fellow Iowans, Iowa expats, and Iowans at heart, thanks for listening and subscribing to the Iowa podcast.